What is your biggest financial concern? Are you being as intentional with your finances as you could be? How confident are you that you'll reach your financial goals? How will life's transitions impact your financial plan? Welcome to the Clarity and Confidence for Life podcast with Tom Fleishel, founder, president, and CEO of Fleishel Financial Associates. Discover how we can help business owners, successful families, and corporate executives achieve clarity and confidence for life while providing tailored financial solutions that eliminate complexity and free you up to focus on what really matters in life to you and your family. Now, on to the show.
Hello and welcome to the Clarity and Confidence for Life podcast with your host, Tom Fleishel. I'm RJ Malik, producer of this podcast. Hello, Tom. How are you today?
Great. Thank you.
Excellent. Okay, so you've got a guest, but first, what are you going to be talking about with your guest?
Today, we're going to be talking about the big issue of property and casualty insurance. We run into a lot of questions that we're hearing from clients about all the issues they're dealing with these days. As we know, there's a lot about all this in the news, a lot of worries about fire and flood and so many things that are hitting clients right now. So I'm really looking forward to having a chat with Steve Hall, who's a property and casualty agent we've been working with for years. He's helped a lot of our clients. They've created a lot of solutions and solved problems I didn't think were possible. So I'm really excited to bring him on and have a conversation.
Okay, excellent. Why don't you bring Steve on?
Welcome, Steve.
Good morning, Tom.
So, we've been working together with clients for a long time. You've been in the P&C business for a very long time, and we've worked with a lot of our clients over the years. I wanted to ask you, I'm not sure if I ever asked you, how did you really get started in the insurance world, and what made you take the direction of insurance in your career?
That's an interesting question because, and actually our agency has written biographies on each one of us because nobody goes into insurance unless their family is in it. It's not, it's not on any of it is now on some of the college campuses, they have risk management programs. But at the time I was going to college, no such thing. So nobody goes into it unless their family's in it. And the way I got into it was I graduated from college with a degree in business management and with a minor in finance and graduated, no job. No.
Yeah.
So my father-in-law at the time was a dentist, and he got me a job at a guy that he had floor plan, meaning loaned money to years before, and he owed him money, and he still owed him money, so he felt he owed him a favor. So he calls up and says, "Hey, my son-in-law needs a job." And so used car dealer, that he found me one, $50 a week. And that was kind of depressing. I did have an offer from the Atlantic Bank on Seabreeze Boulevard for about $85 a week as a teller. And so I was tempted to do that, but luckily I went to the car dealer. Long story short, after about 6 months, I get a call from the man that lived down the street from us. I found out later that he was the first Allstate agent in the state of Florida. And eventually I went to work for Allstate, but he called me and said, "Steve, can you be over at the Allstate region in St. Pete on such and such a date?" I said, "For a job interview." I said, "Yes, sir." And eventually I got around to saying, "Can you tell what's the job for?" "What's an insurance underwriter?" I said, "Yes, sir, I'll be there." So this was 1973. No internet. Al Gore had not invented the internet yet. So guess what I did? I got in my Volkswagen Bug, drove down to the Daytona Library on City Island, which is still there, thank goodness. I haven't been there in a while. But anyway, got the Encyclopedia Britannica or something like that. Underwriter, what in the heck? No, this didn't tell me anything. It told me something, but it made no sense. Then I said, well, let me look in the dictionary. And then that was just as not helpful. So I just didn't know what it was. Well, it turns out, underwriters are who decides what business the insurance company is going to take. So luckily for me, my dad's connection, Sears, the way I got to know the Allstate agent, my dad got to know each other. Sears owned Allstate. for, Sears started Allstate, and they owned it for many years. And at that time, the Sears agents, the Allstate agents were in the Sears stores, if you remember. So
Okay.
so that's how they knew each other. And then we lived in the same neighborhood. So that's how I got the job at Allstate, stayed there for 2 years, realized there wasn't the kind of money I was looking for on the internal side. And here we are.
So you started your own agency after that, after the 2 years at Allstate.
Yeah, sure did. Yeah. July 5th, 1975. So this July 5th, it'll be 50 years.
Exciting. Congratulations. What a nice journey
Thank you.
it's made over all those years. We keep hearing a lot of things that are happening, but I want to hear it straight from the horse's mouth. So, Steve, what are some of the most challenging issues you're seeing in the property and casualty markets for our area here in Central Florida right now?
Well, of course, property insurance is always a problem. Right now, I think we have kind of three issues. Auto insurance has become a problem in the last couple of years, and it's primarily because of inflation, lawyers, and fraud. Not necessarily in that order, but inflation is a big one because people don't think of what insurance does, and so when the things that insurance pays for, the cost of those go up, then the insurance premiums eventually have to go up to keep pace. So when the cost of your vehicle parts and labor goes up, then insurance rates are going to go up. So inflation's been a big one. It's a cost driver pushing up primarily auto insurance, but it also comes into construction costs and stuff like that. Then lawyers, we can't get by talking about insurance. You see them advertising 24/7 on TV. It must be working because they keep doing it. So I couldn't find any real stats on attorney involvement, but over 10 years ago, one of our largest insurance companies told me that 1/3 of all the claims that come to them involve an attorney representation. So instead of just, going to your insurance company and letting them take care of it, now people go to an attorney almost on the first day. When that happens, your costs go up because the insurance company has to get ready to battle that attorney. Even if they win, they still have to pay more costs there. So that lawyer involvement drives up costs. The thing there's some silver lining here to this. The attorney involvement in Florida had a unique one-way attorney fee law. So this is where this free roof stuff got going. And I think we're just about got that solved. But the one-way attorney fee only applied in insurance claims. Isn't that interesting? The result was that Florida had 8%. Florida has about 8% of the houses in the United States. But we had 75% of all the lawsuits against insurance companies.
Whoa.
75% of the entire country. Well, that was when these attorneys and roofers were getting together and figuring out how to work the system. And the one-way attorney fee happens when the insurance company, the roofer fixes it, it says, here's what the cost is going to be. The insured turns it over to this roofer has an involvement with an attorney, and they then would go after the insurance policy and fight. And if they could get $1 more than what the insurance company offered, the attorney was entitled to a fee. And the fee did not come out of the insured's money. It came as a separate amount to the attorney. So they may have had a $10,000 fee for that $25,000 roof. And then they went to the judge and said, well, this was a very difficult case, so we want a 2.5 fee multiplier is what it was called. And so the judge looked at it, and many times the judge said, okay, and that $10,000 fee became $25,000. So here
Whoa.
The attorney got as much as the insured, and guess where the money comes from? You and me, every policyholder. So luckily, that has had a really negative effect, of course, on the property market. Many companies stopped writing homeowners policies in Florida. The good news is in 2022, the state passed a law that said no more. They changed that. So that's one of the very, very biggest improvements, which will work itself. It's already starting to work through the system. It takes a while. It doesn't happen overnight. The companies, wait until to see if it really, really happens. and then they adjust their rates. So many companies have either taken no rate increase or taking small rate decreases on homeowners insurance. So that was a very positive thing.
We've had some real crazy flooding problems in our region last year, especially from the two hurricanes that hit. There's been an outcry from hundreds, if not thousands, of residents bemoaning the problems from developers coming in, clear cutting the area, raising their building sites, and all these new homes. And then the resulting flooding in these older neighborhoods is just devastating. So I'm sure you've run into this, but what are you recommending to your clients about flood insurance, and what are the best options they should consider?
Well, we always recommend that you have flood insurance on your home or business building or business contents. Our value proposition at East Coast Insurors is we help individuals avoid lifestyle changing events, and we help businesses avoid business ending events. So we're worried about the big things. Nobody wants to have a loss, but the ones that concern us are the ones that can change your lifestyle, where you have to do something different, that's really meaningful in your life. If you like taking vacations to Wyoming and all of a sudden you get sued and you have a big loss that's not covered by insurance, and you can't go to Wyoming every year, we don't think that ought to be the thing that stops you from going to Wyoming. That's big things. But we ask them, what are you going to do if you have 4 inches of water in your business or home and you don't have flood insurance? It's 2 days. The water's only in there 2 days, but it's August, and all kinds of bad stuff is happening inside there. It gets sucked up in the drywall, and all of a sudden you have $150,000 loss, and it's uninsured if you don't have flood insurance. So we recommend it, and it's up to the client to make that decision of what they're going to do.
Now, in Florida, a lot of people are having a hard time getting flood insurance, so they had to go to the state program. Is that still an issue?
No, it's actually the federal. It's not a state program. It's a federal program, the National Flood Insurance Program. So that's available. It's not as cheap as it used to be. It's not going to get any cheaper. I just see this week FEMA had to ask the Treasury for $2 billion because they ran out of money. We won't go into the political implications on that, but no, it's not. Availability is not so much the issue. There also is a private market now, and that private insurance companies, commercial insurance companies, have stepped up and will do some things, but they pulled back after Hurricane Ian did so much damage over in Fort Myers and Sarasota, so that they said, let's do it. And then all of a sudden they lost a lot of money, and they said, let's rethink that. So the market is there to buy it. It's just a question of, is it affordable for you?
So if you had a home that was, let's say, 3,000 square feet here in this area, what kind of cost you're looking at for a flood policy? Ballpark.
Probably I'd say at least $1,500 to $2,000. Depends on location. It's location driven. The closer you are to the coast, it would be automatically higher because of the elevation of height compared to the ocean here in Daytona, Ormond, and on pretty much all of Volusia County and Flagler as well. The elevation is so high compared to the beach that the rate is relatively inexpensive over there. In the western part of the county, it just kind of depends on what your location reference to other land. So if you're in a low area, it's going to be higher than if you're, higher elevation.
Okay. Another issue that keeps coming up for our clients, and this is something we've dealt with personally, is what to do about insuring your young adult drivers in the family. So, if they're living at their home with their parents and, quote, on the dole from an income perspective, should they actually own the vehicle they drive in their name and try to get a separate auto and liability policy? Or is it better just to keep them on the family policy? I know you've had some thoughts about that. I'd love to hear your latest thoughts.
Yeah, I used to think differently. Years ago, people would come to me and they had, my son's going to be 18 and I want to kick him off of my policy and I want him to get his own. And we have 100,000 limit, which was the gold standard when I started, and for liability. And we're going to get him the 10,000 minimum, and everything will be hunky dory because he doesn't have anything to lose. And I said, well, that sounds logical. Okay. And so for years we were doing that, but probably 25 years ago, I said, no, that's now I know more. So because of the way the personal auto policy is written, the best way to protect yourself or a parent to protect themselves and the best money wise is if you give if you put your child you put the car in their name and they have minimum limits, well, their future is also at risk. Maybe they don't have anything today, but if you hurt me and I can't ever get out of bed again and I sue you and I get $1 million judgment against you, just because you're 18 doesn't stop me. I eventually wait around. My attorney looks for your assets, and eventually one day you're successful and you buy a piece of property in your personal name and it's not your home, and I put a lien on it. All of a sudden, I'm going to own that piece of property. So there's dangers in doing that. The other thing is parents don't realize is when, let's say they did that and the child still lives in the same household, because that child and the vehicle are still in the same household, that car has minimum limits that the child purchased. And when you get in that car, you now have minimum limits because it's available or it's regular use. In other words, just because it's in the household, the company's going to exclude that from your policy. You won't have coverage for driving that car. If you borrow your neighbor's car, that provision doesn't apply. So because it's in the same household, parents just don't realize that, and it is a big danger. So the best way to do it, keep them on your policy, keep the car in your name. There's danger to you in doing that, but because if they run over somebody, it's coming back to you. But if they run over somebody and they're in your household, the lawyers are going to try to tie it back to you anyway. And apparently they must be successful, because I've had many companies tell me that's a problem. So best way, keep them on your policy. If Junior's on his own policy, he doesn't get a multi-car discount. And if you're paying for it, well, then you're paying higher premiums. So if by putting him on your policy, keeping the car in your name, you get at least a 10 to 25% multi-car discount on that vehicle.
So it's better just to kick them out of the house and they can be on their own job and get in their own
Yeah.
policy.
Yeah, you might want to set them up with an apartment, and give them a nice new stereo. And so yeah, when they're out of the household, they're treated differently.
Okay. That's huge. That's a big difference. I didn't realize that.
Mm-hmm.
What about if they're in college and still you're kind of supporting them in college? Would that be the same?
Yeah, until they're on their own financially, the attorneys are always going to try to tie whatever they do back to you, even though they're adults. At 18, they're an adult. In theory, they're responsible for themselves. But when they're in college, you just have to, the insurance companies are going to look at them as if they're part of your family, because they are. When they go to school, we support them until hopefully they get a job and know an Allstate agent that you can be referred to for a job interview.
Let me switch gears for just a minute. When you go into a hurricane situation, or just think of something like in California with all these horrific fires, if you're an agent and you've got a bunch of clients in that particular area, how do you handle all these claims? How does that work? Do you have other people from the insurance company that is all out there, boots on the ground, helping resolve these claims?
Well, so yeah, that's a great question. We're an independent agent. We represent a number of insurance companies, so we're not tied to just one insurance company. But we're also an agent. We're not an adjuster. So there's certain things legally we can't do. Certainly we could go out to the claim. But when you have a situation like they have in California in those fires, or that we do when we have hurricanes, the client is not best served by us going out there, because there's not really anything we can do. We're going to be empathetic on the phone. The job is to get the claim reported to the insurance company as soon as possible, just to get them in the loop. And with modern technology, insurance companies have their own 800 claims numbers. We have them posted on our website. They're on your insurance policy. You can Google it. There are so many ways to get to the insurance company to do that. We want to talk to the customers when they call in, so we want to be available for that. But if they're calling the insurance company, the result is the same. They're getting in the system so that an adjuster is then sent out. An adjuster who can do some things is sent out to see eventually their property. And now with drone technology and so many other technological advancements, the company probably is doing a Google search or a search, where they can look at an aerial view of your house and see like, okay, where is it accessible? Oh yeah, it's, everything, we can get to it easily and that kind of stuff. So modern technology is really assisting with claims handling.
One other question is, how often do you review policies with your clients to ensure they still have the best policies to meet their needs? I know you guys have been pretty proactive with us. We have a old historic building. We've had all kinds of issues with companies trying to make sure we're covered in that regard. But how often do you review the policies, making sure everything's up to snuff and where it needs to be?
It's a little different on the commercial side. You mentioned a historic building. On the commercial side, there often is more potential change. So we don't have a set time frame. We don't look at it necessarily every year. Some we do, but depending on what it is, we're going to address that as the need arises. And on homes and autos, we used to have a financial trigger as to when we're going to look at it. If the rate goes up beyond a certain point, in Florida, forget it, for a while, for several years, it was blowing through that every time. And so we're going to look at it when we see the real dramatic changes there. We try to, get you with the right company. And then when your situation changes, there are things that happen where a company, you buy a particular kind of vehicle. Maybe the company doesn't want to insure that type of vehicle. So at renewal time, they want to non-renew you. Maybe we know that and we just tell the company, hey, we're going to move it in advance, that kind of thing. But I think the biggest challenge right now, Tom, is evaluation on homeowners on the dwelling amount. We want to make sure that at the time of the claim that you have enough money to rebuild your house. That's a focus of our agency right now, is looking at the replacement cost on your structure.
Okay, that's important. Yeah, for sure. We know there's a tremendous amount of concern about the liability of lawsuits, personal injury attorneys. And how do you help clients determine what amount of liability coverage they should have on their home, autos, recreational vehicles, boats, etc.? Know there's umbrella policies. What do you recommend typically on the appropriate amount for umbrella policies that cover that excess liability?
Well, on umbrellas, the minimum umbrella limit is $1 million. And in Florida, most states, the max limit you're going to be able to get is typically $5 million from your insurance company. Most companies now that write umbrellas want to make sure that they are insuring the autos. That wasn't the case years ago. But now if company X insures your umbrella, if they're not already forcing you to have company X auto insurance, they will be soon. But the amount, buy as much as you can afford. Unfortunately, you see that these attorneys, so-and-so got me 2.5 million and so-and-so got me 800,000. And, they look pretty healthy, but they on TV, but they still got a lot of money. Certainly people can look healthy and have injuries, but that leaves you to pay it. They got that money from somebody. So you want to make sure that if something happens to you, you have the proper amount. So what we do when we ask people to look at umbrellas, we go and say, here's $1 million, here's $5 million. And there's 3 other stops in between, 2, 3, and 4 million. But let them make the decision about, is it something they feel is affordable? I just looked today. I looked at a client that has a $5 million umbrella. It was $1,300 a year. I looked at it in 2015, 10 years ago. It was $700 a year. So it's almost doubled. Still, if you have things to lose, if you have money to lose, it's very inexpensive compared to what you lose,
Well, I know that there's some types of assets that are not attachable, like IRAs, retirement plans, your home in Florida, insurance policies, and things like that. So I guess it's more about determining what types of assets that I have that would be potentially attachable, attacked, from a liability standpoint. Is that correct in my thinking?
Yes, there are those things you mentioned that are not, that they're protected from lawsuits. But when I look at it, it's kind of a gamble because you can end up with some asset in a situation where it is attachable. And then you look back and say, well, gosh, for $1,000 or $1,300, I could have solved that problem. And here's this $800,000 asset that wouldn't be at risk right now. So yes, those things that you mentioned are protected. So that's good. That's why OJ, he lost his Heisman Trophy, but he didn't lose his NFL pension because of those protections. So they work, for the good and the bad sometimes. Anyway, they're for our protection. And so, yes, that helps to have those protections, but it's nice to have nobody ever complains that they had an extra $1 million or $5 million in protection.
Well, that's great. Thank you so much, Steve. These have been great discussions. I'm afraid we're out of time today. I'd love to talk a little bit more about some other things, but we kind of ran out of time. But this has been very helpful, and I certainly hope that all of our clients are going to be able to listen to this and get some good ideas. And if there's any additional questions, how do they reach out to you?
Well, best way is Steve at eastcoastinsurors.com, and insurors is INSURORS. Steve at eastcoastinsurors.com. They can also call 386-265-5701.
Awesome. Thank you so much for your time and expertise, Steve. Really appreciate it.
You're welcome, Tom.
All right, Tom, before you go, how about your contact information?
Yes, the best way to reach us is go to www.fleishelfinancial.com. That's FLEISHEL, financial.com, or 386-738-1800. And don't forget our book, Clarity and Confidence for Life. You can find it on Amazon.
Excellent. All right, Tom and Steve, thank you very much. And thank you for listening to the Clarity and Confidence for Life podcast. We ask you to share this podcast, rate it, and leave a review because this actually helps others find the show. Again, thank you for listening. And for everyone at Clarity and Confidence for Life, I'm RJ Malik, and we look forward to you joining us for the next podcast.
Thank you for listening to the Clarity and Confidence for Life podcast. Click the subscribe button to be notified of new episodes when they become available. The information covered and posted represents the views and opinions of the hosts and/or guests and does not necessarily represent the views or opinions of Raymond James. This content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional financial advice. Always seek the advice of your financial advisor or other qualified financial service providers with any questions you may have regarding your individual situation. Securities are offered through Raymond James Financial Services Incorporated, member FINRA, and SIPC. Investment advisory services offered through Raymond James Financial Services Advisors Incorporated. Fleishel Financial Associates is not a broker-dealer and is independent of Raymond James Financial Services.